right, so I'm pretty sure that we all already know the drill. Tomorrow is going to be the CPI summary that's going to be coming out. CPI also stands for Consumer Price Index, which is basically an index that kind of follows up with inflation data in general. So if you have not really caught up with the content that I usually pump out, my more successful content is usually to do with CPI, to do with the FOMC and such. So of course, before we start the video, if you really enjoy this sort of content, please subscribe to my channel. I'm starting to see a little bit of growth and I'm really trying to hit that 100 subscriber count. And also like this video if this actually helps you out. Anyway, let's go through the consensus for the CPI. For the entirety of Wall Street, basically, the consensus right now, we are looking at 8.8% year over year. So what does 8.8% year over year actually means for inflation data? So of course, right now we are currently at 8.6%, and if they are considering 8.8% for the year over year for June of 2022, currently we are looking at month over month to be somewhere about the 0.9 or even 1.2%, somewhere in that range or so. So if you're looking at about 1.2%, I think what we really have to kind of dwell down into would also be talking about prices in general. Commodity prices, let's be honest, commodity prices hasn't really been shooting up as much as we really thought it would. Of course, there is a lot of volatility in the market right now. And of course, if you're looking, and if you have not followed right now, you can see a little bit of stubble going on right here. And this is just kind of like my ritual for myself. When I shave, the market's going to go up. When I don't shave, the market is just going to go down. I've been having this for like about 2 weeks, and we're having a 2 weeks sort of nosedive in the market. So yeah, I mean, I'm not going to shave anytime soon because I'm still shorting the market as of now, and I don't really see an exit for those just yet. Of course, I do take profits from time to time to ensure that those gains are secured in. But right now, I'm still basically shorting the market. I don't see the market recovering greatly in the short term as of now. So, but let's talk about CPI, okay? Especially, I do think that food prices is definitely going to continue going up. I think that food prices is going to be one of the most persisting factor of inflation. As much as people would think that oil prices might be a persisting inflation factor, people might think that chips might be a persisting inflation factor. I think that food and shelter, these two are the ones that's going to cause the least amount of pain for a very, very long time, and eventually it's going to just snowball into a very, very huge number. Because if you actually just look at food prices as a whole, okay, food prices are not really doing very well. It just keeps on adding up and up and up. And it's kind of scary because when you kind of see food prices just continue going up, I think like eggs is like up, I think about 20% right now. So it's crazy. It's been going up every single month. And when we go through the CPI data, we just look at a month over month. Sometimes we look at a year over year. And when we look at a month over month, we see, okay, it's like what, 1.8%. Okay, that's fine. Next month is like up another 2%. The month after is up again another 1.12 or like 1.3%. Whatever it is, we keep on getting this few percentages every single month. Okay, and that in all creates like what, 17% inflation year over year. For like a commodity like eggs, something that the whole entire world uses a lot of, especially for Asian cuisine. But like that aside, so I don't think that oil prices is going to be this very huge persisting factor. Of course, it is a huge worry, especially with the whole Nord Stream 2 fiasco that happened yesterday as well. But and let's be honest, euro just basically went down to clock 1-to-1 with the US dollar as well. So that's going to be more oil fear as well, because that simply means that the United States dollar is a lot more stronger. But I most likely would be doing a video on that. I actually wanted to do a video on the whole Elon Musk and Twitter for today's video, but I thought that because CPI is basically going to come out on the day that I'm going to be recording anyway, so I think that this would actually serve as more of an urgent video for you guys, so that you guys can have my sort of expectation for what's going to be happening for this CPI. So yeah, let's look at like 1.2%, for example. If we are looking at 1.2%, currently I'm looking at about 1%, 1 to 1.2%. I don't think we're going to get anything below 1%. However, if we get a beat on estimate, and of course by beating the estimate, we are talking about going downwards, And if we beat the estimates by getting like 0.6%, 0.5%, I do see a little bit of rally going into the market. But let's not forget, okay, a rally in the market is not going to be that good, because we have to also take into consideration that the earnings season is going to be starting next week. So you're going to start getting banks, the earnings for banks. You're going to start getting earnings for retails. You're going to start getting earnings for tech. These three are the ones that I'm particularly more interested in looking. Simply because banks, we want to look at interest rates. How are interest rates really affecting the banks? Secondly, we're going to look at retail, because especially with what Target, Macy's, Walmart, all of them, the horrible change in price guidance that they actually gave us in the prior months, that's something that we really want to look out for. Next up is tech. Okay, tech has been bleeding dry. Okay, we're not just talking about tech as in Tesla. We're talking about tech as in every single tech company out there, be it your Roblox, be it your AMD, your Nvidia. Okay, those are so-called your bigger techs. You have your smaller tech companies as well. Okay, people who are dealing with the smaller subset of the tech sector. And let's not forget that we also have tech sector in the crypto market as well. Okay, you have to look at Coinbase. You have to look at all your other coins as well, because they are probably going to be going through a hell of a quarter. And by hell of a quarter, it's not going to be something good either. So that's going to be a pretty bad quarter for a lot of things. And that's why, like I said before, I don't think I'm going to be shaving this anytime soon. I think I'll most likely be shaving this off when we actually hit a recession. So I'm not sure how that's going to be working out for the entire economy. I think for earnings wise, I would most likely be making another video about it. It might not be on the same Wednesday and Saturday schedule, because I think I want to get it out before the earnings begin. But I'll see how it goes. I do have a few videos lined up that's out of my schedule. I do want to pump up a little bit more videos because I thought that there's some content that I'm really dwelling about, and I really want to explain this sort of information to you guys. But yeah, right now I think CPI is definitely going to be a worrisome topic for us. Hopefully, we do not see anything above 1%. For month over month. But I do predict that food prices is definitely going to be a persisting factor. Oil prices is going to be, if anything, we might actually start to see a little bit of a disinflation, aka, instead of us actually seeing 7% month over month on energy prices, we might actually start to see like 4% or 3%, or even deflation, such as like negative 0.4%, something of that nature for energy prices. I don't think that energy prices is going to continuously just keep going up. I don't think that's kind of how that commodity group actually work for pricing wise. Next up, we have to look at airline fares. I do think the airline fares still have a lot more to go, especially because we're actually going into the holiday seasons as well. Soon, I guess. When you're on the second half of the year, usually airline fares or people that want to go overseas, that's when you actually get a huge bulk of people wanting to go overseas. People who want to go out to have fun, people who want to go out to just spend the summer and such. I think that's the time where airline fares usually spike up, and especially let's not forget that we just got out of a pandemic, or at least we got out of a pandemic. I think that's going to be a contributing factor as well for the amount of people to suddenly have this euphoric need to actually go overseas with their friends, with their family and such. So I think airline fares should not have a stop in the rise just yet. I think that we're still going to be seeing atrocious number for airline fares. Most likely going to be at like 6 to 8% or so. I'm assuming 6 to 8%, or even like 12%, something ridiculous for airline fares. I don't think we're going to suddenly see a disinflation where we are going to see like 2% on airline fares. I seriously think that airline fares still have a lot more to go. So yeah, for airline fares, most likely going to be a huge contributor for this month's CPI as well. And then finally, it will most likely be all the accessory sort of thing, where you have your apparel, you have your house fitting and such. Okay. One more prediction expectation that I do have for house fitting. I think the house fitting is continuously going to see more deflationary pressure. Okay, so let's be honest, we are already starting to see people not buy houses as much. People are really starting to cut down on purchasing of houses. People are canceling on house purchases, house deals and such. I think those are going to be definitely affecting the whole house fitting in general, interior design, house fitting, furnitures, all these are all going to be going down as well. So I do see a little bit of a disinflation or even a deflation happening in those categories as well. But yeah, hopefully, we do not see something huge, like 1.3%. I think 1.3% would definitely be a huge rate alert. I think anything 1 to 1.2% will still be all right. If we see anything below 1%, it would be great. It means that we'll start to see maybe 8.5% year over year. But yeah, anyway, that's kind of all I have for CPI. Stay tuned for the video for tomorrow, where I'll be talking about the whole Elon and Twitter deal. It's out of my schedule, but I'm just going to be uploading that tomorrow. Stay tuned for that. But anyway, thank you so much for watching. If you actually watched till this far, okay, subscribe to my channel. Okay, I'm going to put it up here somewhere. Subscribe to my channel, like this video, and thank you guys so much for watching. And I'll see you guys in the next one.